Hello everyone and welcome to our latest buy-to-let property hotspot series. In today's video we're going to be looking at Birmingham as an area, and we cover about 12 different postcodes in the video. About 7 or 8 of those we highlight as potential areas for very good indicators that cover all the different data sets, all the different metrics that we internally use in our own property investments. And when we're assessing a new area, these postcodes pass all of that criteria. So exactly what the postcodes are, exactly what data set we tend to look at. Everything from historic and recent house price growth, both in market values and also sale prices over the last 12 months, 5 years and 10 years. Also sale prices, how quick properties are going to actually sell within a given location. So it can be an indication as to maybe how buoyant the areas are. And then we'll round that up with a potential property deal. So our team is working to try and find you the best property deals that we can across the country. There's one particular postcode in Birmingham that we have a ready to go live project today that you can purchase and invest in if you wished to. So any questions, as always, don't hesitate to ask, and we'll go straight into the content. So let's get straight into the content. So we're going to be focusing on Birmingham, as we mentioned, for this buy-to-let hotspot series, and just really trying to identify how and why Birmingham could be a potential place to look at for your next buy-to-let property investments. And then also, hopefully, is a potential area for long-term growth as well. Rental yield and rental income is very important. It's the main thing we focus on, but it's also good to see what the growth prospects of a given area is going to be like. So in today's video, we focus on Birmingham primarily, and there's certainly lots of other options out there, but Birmingham is a very large city. You can see here from a location point of view, it's very centrally located, so it attracts a lot of interest and a lot of demand from investors and also homeowners based on its kind of location and proximity to many kind of main areas. So from a work and commercial point of view, it's got lots of reasons to kind of live and work there. As you can see, Liverpool, Manchester to the north, Birmingham relatively central, and London to the south. It's very close to lots of other major cities in and around the UK. It's very large in itself as an area. Second largest city in the UK, and then you also have very good connections, as you can see, with motorway links coming from London through to kind of Birmingham, and then going kind of further north. So it's very well placed. In terms of tourism, if we go to Birmingham, kind of visit Birmingham website, tourist information, just get an idea as to what the area tends to be about, really. So you've got attractions, festivals, as you can see here, culture, heritage. It's a very historic town. There's lots of, or city, there's lots of reasons to visit Birmingham from a tourist point of view, lots of reasons to kind of live there from a commercial and economic point of view and family point of view as well. And then as you can see here from clicking on the images for Birmingham, if you were to Google Birmingham, you get a feel for what sorts of images kind of show up. There's lots of blends of different types of buildings. You have historic buildings mixed with more modern designs and styles and more futuristic kind of designs for plans and developments that are due to be created in and around the Birmingham area. So it's very much an area that's growing currently, has historic demand, and also has some very nice long-term plans for the city as well, which looks very good, looks very positive. So as an area, hopefully gives you that sort of starting point as to kind of what it looks like. But the main reason why we're looking at it is for its buy-to-let potential and to see if it can be considered as a potential buy-to-let hotspot. So the first part of this is looking at things like heat maps. Now we do have a spreadsheet here which we've created that pulls all the information in, the same as we've created for other areas. So if you wanted to get the very quick upshot as to what postcodes are working kind of within the Birmingham area at the moment, I'll go on to the detail of the data shortly, but you can see here you've got these postcodes. So B1 to B6 is looking very positive. We've highlighted those, and B15, and then also B12 as an area. They fit all of the fundamental criteria that we've kind of outlined as potential markers to indicate a good area. So if you wanted to kind of jump straight to that, you can certainly check out these postcodes yourself and see if there's any opportunities within there that fits your own metrics. And we've also got a project that the team has found within the postcode of kind of B12. So if you wanted to have a look at that, you can simply follow the opt-in form below this video or on this page, and that'll take you through to any of the deals that we currently have that the team have found in this Birmingham potential area. So Birmingham is an area that does look good from what we can see, and there's a project here as a buy-to-let project that you can progress with ready now if you wanted to kind of go down that road. If you wanted to stick around for the data, we'll go through that shortly, and there's a couple of things that we'll kind of cover within that mix. But essentially, from a growth prospect, the heat map really is the main criteria that we're going to be starting with, just to see if the area is looking positive, if there's good signs of value within that location. If you've not used heat maps before, very kind of quick insight is that it's color coded from dark blue as a lower value location based on price points, through to dark red as a higher value area based on price points. You can see these sort of Edgbaston, Solihull, Sutton Coldfield, this sort of close central locations. You've got some quite good high value locations and areas there, and then further on, if you kind of sort of scroll out, you do have some patches of kind of darker blue. But fundamentally what we want to see is, if we're focusing on any area really, or any town, city or postcode, that we are close by to some of the higher value property prices. It's a good indication historically of values potentially spilling into nearby towns and cities. So if you were, for example, looking at a location here and you were close by to these higher value areas, if people can't afford to live in these higher value areas, then very often they gravitate to locations quite close by. So we use the heat map as a good indication to see what any given town and city might look like as potential values, and also potential for buy-to-let and long-term growth. Birmingham is got some very good high value locations nearby it, so in that instance it is certainly an area we would look at further, and it's certainly an area we'd dig into deeper within individual postcodes. Now, in terms of the data, there's just a couple of caveats that we need to kind of cover off here. So firstly, this isn't intended as financial advice. We're purely looking at third-party data, so you can get an idea as to what we're seeing based on the websites that we use. And we use very mainstream kind of websites, so mouseprice.co.uk, zoopla.co.uk, Wikipedia for postcodes, things like that. So these are data sets that are easily accessible for free across the internet. You can access these yourselves. We're just simply showing you the indicators that we internally use to assess property projects for ourselves. All properties that you might consider, you can find a good location, but it could still be a bad property. So it's well worth doing your own research on both locations and also properties. So any property or any location that we identify in these kind of heat maps and buy-to-let series, we would still recommend you do your own kind of research. It's not and isn't intended as to replace any of your own kind of research that you would do on your property purchases. Property is risky, and like any asset, it can go down in value, so there's no guarantee of growth. We're looking at historic data, so it's historic performance, past performance, and that's certainly not an indication or defined indication of what's going to happen in the future. It's just a snapshot in time as to what has happened previously, so it's historical or estimated data. As you mentioned, each development and property should be considered in its own merit. And this is a showcase of the research that we ourselves internally carry out, and also that we get many investors talking to us about as to what they look at for their buy-to-lets as well. But as we mentioned at the beginning, it's certainly not a definitive data set, and it's certainly not a definitive that this area is going to outperform any other area across the UK. We're simply looking at a snapshot in time here for Birmingham and having a look at how it could potentially be performing. And then lastly, this is average data. So certainly you will see individual properties that can outperform this data. You'll see properties in postcodes that we aren't highlighting that can perform very well. And again, there'll be properties potentially within these postcodes that don't perform quite in line with the average. Postcodes can cover very large areas, so certainly outliers can skew that data. So please do your own research on locations, please do your own research on areas, and hopefully this data set will just give you some additional information to kind of consider within your mix of kind of blended research. So to give you an insight, if this is the first video you've seen in our buy-to-let kind of series, we have done others previously on other locations. So you can kind of see here some of the other areas that we've covered. All of these areas are covered in our VIP training as well, and we include some of them as a snapshot on the main website. And when we're looking at any kind of given area, we're following the same kind of metrics. So if you've seen a couple previously, then all of this detail that we're looking at is going to be similar following forward. So we're looking at three main color coding systems. So we've got kind of the area baseline. So Birmingham here is coded in grey. primary postcodes are the ones that cover all of our metrics for growth, so 4 out of 4 they pass, and these are the metrics here. And then secondary postcodes, colour slightly differently for ones that perform and achieve 3 out of 4. So the metrics that we're looking at typically are around growth. Buy-to-let, we certainly do consider yield. That's the primary factor that we consider above everything when we're looking at buy-to-let, but that's definitely going to be property specific. What we want to be focusing on is area and the potential growth metrics that area can deliver. So we're looking at historic growth, we're looking, which is identified by heat maps, we're looking at historic market growth for both market prices, so is there a steady overall trend of market prices going up? And we're looking for solid demand, so are property prices actually selling and achieving good sale prices? And then also speed, are they selling within a quick time frame? So all of these are the key indicators that we've seen historically as showing good trends for possible growth in a given area. Now you can look at certainly other things like population growth, employment growth, income, things like that. But typically these are the main metrics. If we were to condense it down to just 4, these are the main metrics that we've seen that supersede any others to achieve that stats that we really want to be focusing on. So what we'll do is, instead of going through each single individual postcode, I'll highlight one particular postcode, so B1 for example, and show you exactly the data set and how we have typically found it and used each of those data sets. So the first stage is just looking at the area. So Birmingham. Does Birmingham as a location match our criteria for heat maps? This certainly would do. We've got some very good high value locations nearby. It's not all low value areas, so that gives us some potential for growth, some potential for good prices and yields, and also good kind of spillover, hopefully, from some nice value locations. Next up, so that's using mousepricetypically.com that we use for that first stage of research. Next up, we're going to be using Zoopla.co.uk, and that's where we're going to be identifying individual postcodes. So this is just using their normal for sale search, B1, and then we're using the map section for this search. And instead of here where you might initially see the map outlined, what we're looking at here is the heat section. So if you click on heat, you can see the map is kind of overlaid then with the blended values. So this is exactly the same kind of metrics we're looking for. We're looking for some dark reds, perfect, some yellows, and some maybe greens. That gives us a good indication of what values we might be seeing in and around the area. Light blues are okay as well. That gives us good areas for yields typically. And then dark blues is lower value locations, on paper higher value yields, but maybe a bit less or a bit more historically sluggish kind of growth. So if it's a fully dark blue area, that's certainly going to be a red flag, and that would mean, so this snapshot in time, you can see here quite a decent sized kind of picture. That would be across this whole kind of image rather than just this street section here, for example, because we're looking at blended data, so we need to look at a slightly bigger picture, but that certainly performs very well. And if we can change postcode here, you can see how that looks in a slightly different area of Birmingham. So if we clicked on B2, for example, we can then see what the property prices and values are like in Birmingham postcode B2 area. Initially comes up just with the map section. If we click on heat, again you can see how the prices are shown in the color coded system. So again, very good kind of area. So what this looks like on the spreadsheet is we've allocated where all of these properties and areas are positive or not with heat maps. I'm just going to show you B7 quickly as well, because that's one that hasn't passed our internal metrics for heat map prices and therefore potential growth, and just to show you the difference in terms of why that might be. So it's quite close to town. You've got some very good values here, and if you were looking at this part of town, the spillover is certainly potential from these sorts of areas, but B7 as a area is probably 70% plus lighter blue or kind of slightly darker blue kind of areas, and then surrounding the majority of that, again, you have some greens, but typically lighter kind of blues and some yellows kind of further over, but you've not got lots of values that are showing very good positive chances to kind of spill over. Doesn't mean it's a bad area, it doesn't mean it's not going to have growth. It's just we would ideally be liking some more higher value locations kind of closer by, maybe some in and around some kind of areas around here. A few more reds would be perfect, and that would kind of tip it over the edge to be certainly an area that would kind of be worth considering. But if you are, or if you already have properties in this postcode, as I said, doesn't mean it's a bad area, doesn't mean it's not going to have growth. We're not looking at local knowledge here, we're just looking at the data and what that's typically showing us. So once the properties are past the first criteria, so Birmingham does pass the heat map positive test for us. And these postcodes do pass each of the postcode heat map area test. These ones don't. Once it's past those, then we start looking at the data and seeing how that can start to kind of play into the main stats that we're looking at. Now, there's a couple of stats here that we look at, so market prices and the sold prices, and then we have some calculations here that we've created ourselves to get some form of percentage values, and then also selling time. So we're just going to start here on the market values, and we look at a last 12 months, 5 years and 10-year change, both on market values and then also sold prices. So this data is very easy to get. Zoopla, house prices. We're looking at B1 postcode here, and then it's essentially this top market activity box that we're going to be looking at. This data here will change in line with your property prices, or property types, sorry, and date ranges. We don't change the property type, we're just looking at any property here. We want as much data as possible to play with. And then we're looking at these data sets, 12 months, 5 years, 10 years. So we start off with 12 months. And then effectively what we've done is we've just taken this data, so the value change for the market value, so how much has the market prices of property on average changed in B1 over the last 12 months. This gives us a pound figure, and then this gives us a percentage. And then also we're looking at that same date range, but average price paid. So what is the average price that somebody has paid, or people have paid for properties in that postcode in the last 12 months. And then we've effectively just populated our spreadsheet across from here. So we've put in columns market changes in terms of pounds, market changes in terms of percentage together, and then sold price changes in terms of pounds together as well, just to make it easy to kind of see at a snapshot. And you can change that date range to 5 years, and then we've pulled this data manually into the spreadsheet as you kind of see it here. So it's as simple as that. What that means on this spreadsheet is there's a couple of key indicators that we've taken again internally as what we see as the leading indicators of historic growth, and then hopefully potential for future activity going in the same sort of direction. So first of all, these are the key metrics that we're looking at. One is a pass for house price. We're using heat maps. 2 is about 18% in the last 5 years. We're looking for a value change. Now that's quite a specific figure, and that's not based upon any hard and fast rule. It's just an internal rule and metric that we've created because we tend to see properties areas that have below 18% growth in that kind of 5-year time frame for market values as sort of struggling slightly in terms of historic growth when we've mapped it out over our own portfolio and other properties and test properties over a period of time. So that's the indicator that we've set. And you can see here, this is where we'd be looking at that data. So all of these postcodes here have passed that. Some very good growth in Birmingham actually compared to many other towns and cities across the UK. It's been rapid over the last 5 years. In line with kind of London and Manchester as well, they've had some very good growth as well. But you can see here, these are our data set here is 18% above. These are all sort of 28, 27, 29%. So very good growth metrics there. Next up, we're looking at a percentage of actual price paid. So we're looking at a growth on value as well as, so market value as well as the actual physical price people are paying on average from that 12-month to 5-year time frame. And we're looking for about 5%. Now that's not going to be a 5% growth per annum, or it's not going to be anything like that. It is a blended data set. We're using average prices, and it's using data from across all of this time frame of 5 years to 12 months. So it's difficult to show using that data as a price per year, because we want to keep it easy for ourselves and our team, and also for yourselves to try and check the data. We just want to use kind of one main data set, and that's using this. This 5% here is the metric that we've internally effectively set. Now you can see some absolute fantastic growth from this sort of postcode, B3, 165 to 237 as average price paid. Oops. So some very good growth there. That's way and above our typical target, as we said, of kind of 5%. So that's fantastic. So all of these have been highlighted blue. This one here is just slightly below the 5% mark, 3.94. Now there has been growth. You can see here it's gone up from 125 to about 135. And there has been very good market value change in that time frame. It's just the actual sold prices itself hasn't gone quite as high as some of the other areas. So this data really is looking at, as I said, a blended data set of market values as well as active sold prices. Now there are things that can really swing this change. So a brand new build development, for example, of high value properties can really impact the data set. So outliers like that will certainly give you some change data. So maybe in B3 there was a large development of houses or apartments that push the values up of prices sold, and hence you're seeing these sort of data stats. Even with that though, that still is a good indicator for local prices, local growth. So even with that, it shouldn't impact the data that in a way that's hopefully it's not going to be validated and still worthwhile kind of looking at. But you just might not have that same impact in some of these other postcodes. So this particular postcode here of B12, although it's not got that 5% growth in this metric that we're looking for, all these other metrics do look very strong. So we are still looking at it and highlighting it as an area for us to kind of consider and for our team to look at if we were looking at Birmingham. It's an area that we would kind of consider within Birmingham for that very reason, because it does do very well on all the other metrics. Not only that, but compared to the rest of Birmingham, its growth has been a little bit more sluggish in sold prices, but still in line with the majority of other metrics that we tend to look at. So it may be that there's potential growth as a regeneration area here in this kind of B12 postcode, or there might just not have been many sold properties in that time frame. It might not be an active area, might be more commercial, might be more industrial. As I said, there's no local knowledge playing into this, it's just purely data led. So there's things like that that will really impact what this data set starts to look like. And if there's not been very strong growth over a period of time in one particular postcode, but all the other areas are very good, and B12 is looking good from a heat map perspective, for us that's prime area then to hopefully have some values spill over into this area. Price ranges are affordable, yields should therefore be relatively strong, and the growth has been relatively stable, so hopefully there should be some nice growth metrics coming up in the future. Not only that, but the median selling time in 8 days, this is our final kind of metric. For this we are looking at home.co.uk. Time to sell analysis. You've got lots of different data you can kind of consider here. We're typically looking at median. So the average time using the median data range or data set for B1 postcode is 43 days. And you can change your location here and put whichever postcode and area you want to do. So as an example, let's say we're looking at B12. It's 45 days. If we're looking at B5, you can see it changes to 56 days. So this is just reflective of how many properties are selling within a given area. And certain areas will be more buoyant than others in terms of number of properties that are being sold as well. Now the reason we use median is because it strips out any outliers. So you might have 1 or 2 properties that sell really quick or sell really slow that can impact this date range, especially when there's not much data to play with. So by using a median data set, it just balances out that data that we're playing with. And 60 days, again, there's no specific reason why you have to use 60 days. You can use any data set you want. We personally favour 60 days because for us that's shown us anything that sells usually under that time frame is a more active kind of market. As long as we get all the other metrics right, properties right, then we should achieve some quick sale times. There should be some demand effectively within that location to buy properties within that space of time. So we put all the date ranges here. So some of these areas, so this postcode here, B7, is out of that 60-day time range. The majority, or all the others actually, are below that 60-day time range, which is good. But these B7 postcodes we haven't, and 8, 9, 10, 11, we haven't done any further data on, purely because they didn't pass our first metric of the heat map section. So hopefully that helps give you an idea as to what sort of data we're seeing in this spreadsheet, and fundamentally what sort of postcodes are actively showing as potential buoyant property areas for buy-to-let. Could be potentially a good hotspot area, and potentially a good spillover area for growth, as B12 seems to be looking like from the stats that we're seeing. So we've got these postcodes here, B1, 2, 3, 4, 5, 6, B12 and B15. If we were going to invest in Birmingham now, these are the postcodes that we'd be paying a bit more close attention to, and these are the postcodes we'd be looking to source property investments in. Now, as we said at the beginning of the video, our team has found a project within the B12 area. So if you were looking at Birmingham and you did want to consider property deals, we do have a potential opportunity. You can opt in below this video, just follow the link or use the opt-in form, and that should give you the full details of the properties. Now, all of the deals that we look at within our kind of services, we typically now work with other third parties to deliver them. So we work with one main company for our buy-to-let opportunities, and that's the company that has got these deals available in Birmingham. They do also have other areas available, so they can chat to you about other areas if you wanted to, but they've typically got a range of different properties at any given time, but specifically in the Birmingham area, this is a postcode, this is an area, seems to be showing some nice kind of potential for growth. So I hope that helps. Any questions, as always, don't hesitate to ask. You can get all of these locations and all of these and the full spreadsheet showing all of these locations in our VIP training, or you can see the snapshot of this area, obviously in this kind of video as we've kind of gone through it today. I hope that helps, and certainly hopefully it's shown you how we tend to do some initial assessments on areas, and you can use this in any given area. We'll be doing probably about one a month of these sort of video snapshots, and we'll be looking at new areas each time. So the next area that we're looking at might be Sheffield or Leeds or any area typically around the UK where we seem to be seeing some nice metrics, some good growth. So if you've got any recommendations, any areas you really want us to cover, just put them in the comments section below this video. That'd be great, and we can certainly take it into account when we're looking to kind of cover and assess the next potential buy-to-let hotspot location in our property series. Once again, hope that helps, and look forward to catching up with you soon on the next video. All the best, take care.